Hey everyone, it's Thursday morning, December 19th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, here to break down yesterday's market action in just 2 minutes. Let's get started. Before we dive in, a quick note, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. Well, the Federal Reserve certainly grabbed the spotlight yesterday, and not in a good way. They cut interest rates by 25 basis points as expected, but here's the kicker. They signaled fewer rate cuts for next year than investors were hoping for. And yeah, the markets did not take it well. The Dow dropped over 1,000 points, down about 2.6%, marking its 10th straight losing session. That's the longest losing streak since 1974. Meanwhile, the Standard & Poor's 500 fell roughly 3%, and the tech-heavy Nasdaq took the biggest hit, sliding more than 3.5%. So, what's behind the market meltdown? Well, the Fed revised its projections, now expecting just 2 rate cuts next year instead of the 4 they were eyeing back in September. They also raised their forecast for inflation and economic growth, signaling that things might not cool down as much as we thought. Fed Chair Jerome Powell said the central bank can be cautious about further cuts as long as the economy and labor market stay solid. Not everyone on the Fed agreed, though. Cleveland Fed President Beth Hammack actually dissented, arguing against any rate cut. Some experts are calling this a hawkish cut, meaning the Fed might keep rates higher for longer than expected. That sent the 10-year Treasury yield climbing nearly 11 basis points to just under 4.5%. The ripple effects hit the market hard. Rate-sensitive sectors like real estate were among the worst performers, and the small-cap Russell 2000 index dropped roughly 4%. Even with 2024 shaping up as a stellar year for tech stocks, the Dow is stuck in its own losing streak, left out of the recent rally. So where do we go from here? All eyes will be on how the Fed navigates inflation, the labor market, and their next steps on rates. One thing's for sure, investors are not loving this cautious tone from Powell. That's it for this morning's Capital Markets Quickie. Thanks for tuning in, and don't forget to subscribe so you're always in the loop. I'll see you tomorrow with more market updates. Have a great day.